Hello everyone. Today we will be studying about Introduction to Financial Accounting. Now, what is accounting? Accounting refers to the process of recording, classifying and summarizing events which can be converted in terms of money and can form a result based on the records. Next topic is terminologies. Before going in depth with accounting, we need to know the terms used in accounting. Now, let us study one by one. The first one is assets. Anything which will enable a business enterprise to get cash or a benefit in future is asset. Asset is further divided into three types. The first one is fixed asset. Assets that are acquired for relatively long period for carrying on the business of the enterprise and not meant for resale are known as fixed assets. Example, land, building, plant, machinery, etc. Next is current asset. Assets which are held essentially for a short period and are meant for converting into cash. They are expected to get converted into cash within one operating cycle of business. Example, cash, inventories, debtors, bills receivable, etc. Next is liquid asset. Assets which are immediately convertible into cash without much loss. Example, marketable securities, stamps, etc. Next term is liability. It is the amount which a business owes and has to return or account for. Example, loan from bank, trade creditors, etc. Capital. It refers to the amount invested by the proprietor in a business enterprise. It is an owner's account, that is, a personal account. Next is revenue. It means income of a recurring nature or form, any source related to business. Expense. It denotes the cost of services and things used for generating revenue. Example, payment made to employees, carriers inward and outward. Expense is different from loss. An expense is supposed to bring some benefit to the firm, whereas a loss brings no benefit to the firm. Example, loss by theft, loss by fire, etc. Capital expense. An expenditure which has been incurred for the purpose of obtaining a long term advantage for the business. Example, expenditure incurred for purchase of fixed assets. Revenue expense. All items of expenditure whose benefit expires within a year or which has been incurred merely to maintain the business or to keep the asset in good working condition. Example, salaries and wages paid to employees, depreciation of business assets, maintenance expense of motor vehicles, etc. Creditor. Any person who gives credit is a creditor. Example, proprietor gives money to other business so he is a creditor to the business. Sundry creditor. A group of creditor are called sundry creditor. Debtor. A person who owes money to the business is called a debtor. Solvent. A person who is in the position to pay his debts as they become due. Insolvent. A person who is not in a position to pay his debts as they become due. Drawings. Cash or goods taken by owner of the business for his personal use. Wages. Remuneration paid to workers for the service of the work done. Salary. A fixed regular payment made to employees on monthly basis. Example, the salary obtained by government employees. Stock account. the goods or merchandise in which the business owns. Investment, the purchase of goods used to create profit in future. Brokerage, the act of selling goods between the buyer and seller. It acts as a middleman and receives compensation by means of commission after one transaction is successful. Next topic is accounting cycle. Accounting cycle refers to the process carried out in a financial year starting from recording the transactions, classifying them into different categories, summarizing, and lastly forming a result based on the records. In accounting cycle, the first step starts from transaction, which means we record the events which can be converted into monetary terms. Next is journal. Journal is recording the transactions in a sequential manner. Next is ledger. Ledger is classification or categorizing the records in groups. Next is trial balance. Trial balance calculates the balance between the debit and credit side. Next is final accounts, which includes trading, profit and loss account, and balance sheet, from where we can know the result. Either the business is in profit or in loss, and we can also predict the worth of the company after studying the final accounts. Next topic is types of account. Accounts can be mainly classified into two types: personal account and impersonal account. Personal account are those accounts which are opened by an individual person or a company. A company's account is also counted as personal account because the owner and the company is counted as a separate entity, that is separate person in accounting point of view. Impersonal account is further divided into real account and nominal account. Again, real account is subdivided into tangible and intangible account. Next topic is rules of debit and credit. In case of personal account, debit the receiver, credit the giver. In case of real account, debit what comes in, credit what goes out. In case of nominal account, debit all expenses and losses, credit all incomes and gains. Next topic is accounting concepts. The first one is separate entity concept. Every business is a separate entity from the proprietor. Business and owners are distinct. Next is money measurement concept. Record those transactions in the book of account which can be expressed in terms of money, and the events which cannot be converted into monetary terms are excluded from accounting. Cost concept. All transactions are to be recorded in the books of account at their cost price when purchased, not on the market price. Dual aspect concept. Every transaction has dual effect. If there is a debit, then there has to be a corresponding credit of the same amount. If an asset increases, then there will be a corresponding decrease in other asset or increase in other liabilities. That is, assets equal to capital plus liabilities. Next is matching concept. At the end of the financial year, all costs of the organization are to be matched against the revenue of the organization. Next is going concern concept. It is assumed that the business will continue for a long time. There is no intention to liquidate the particular business venture in the foreseeable future. So, Depreciation on fixed asset is charged on the basis of their expected lives. Perpetual consistence of business concern is assumed. Next topic is accounting system. Normally, there are two systems of accounting: cash system of accounting and mercantile or accrual system of accounting. Cash system of accounting. Accounting entries are only made when cash is received or paid, that is, when actual cash exchanges hands. No entry is made when payment or receipt is merely due. Example: government system of accounting and small business enterprises. Next is mercantile or accrual system of accounting. Accounting entries are made on the basis of amount having become due for payment or receipt. In this system, sale is recognized soon after the delivery. Example: commercial accounting. Next topic is journal. Journal refers to recording all the events which can be converted into monetary terms. Let us discuss an example. These are the transactions. The given below are the transactions of a particular company. Journal are recorded as below. In the journal, particularly, there are 5 columns. The first one is the date, and then particular, ledger folio, debit side, and credit side. And the rules of debit and credit are followed according to the type of account, either personal account, impersonal account, impersonal account also, if the transaction is a real account or a nominal account. Accordingly, the rules are followed. Next topic is general ledger. Ledger means arranging all the recorded transactions in such a manner that similar type of transactions are grouped separately. A general ledger is a company's set of numbered accounts for its accounting records. The ledger provides a complete record of financial transactions over the life of the company. The ledger holds accounts information that is needed to prepare financial statements and includes accounts for assets, liabilities, owner's equity, revenues, and expense. Next topic is trial. Trial balance is a statement which shows balances of all accounts on a particular date. It is a list in which all the balances of the accounts of the ledger are shown to test the arithmetical accuracy of the posting in the ledger. It is prepared after the end of a particular period or year, half yearly or quarterly. Preparation of trial balance. It contains 3 columns which are as follows: particulars, debit amount, and credit amount. The following rules are to prepare a trial balance to be kept in mind. The balances of all the assets account and drawing account are recorded in the debit side of the trial balance. The balances of all the liabilities and capital accounts are recorded in the credit side of trial balance. The balances of all the expenses and losses of the business are shown in the debit side of the trial balance. The balances of all incomes and gains are disclosed in the credit side of the trial balance. The balances of sales and sales returns are disclosed in the credit side and debit side of the trial balance, respectively. The balance of purchases and purchases returns are disclosed in the debit side and the credit side of the trial balance, respectively. Next topic is final accounts. The final account plays an important role for every kind of organization. There are two main objectives of preparing final accounts: to know the operational result, that is, final accounts are prepared to know the profit or loss during a particular period through the profit and loss account, which is also known as income statement. To ascertain the financial position of the business on a particular date through the balance sheet, also known as the position statement. Classification of final accounts. The final accounts can be classified in the following categories: trading account and profit and loss account. Trading account. Trading account is the comparison of sales and purchases. This account is prepared to determine the amount of gross profit or gross loss on sales. Profit and loss account. Trading account shows the gross profit, which is the difference of sales and cost of sale. In the debit side, all the expenses and losses are disclosed, and the credit side, all incomes are disclosed. The excess of the credit side over the debit side is called the net profit, while the excess of the debit side shows the net loss. Net profit increases the net worth of the business. Therefore, it is added to the capital of the owner. Net loss decreases the net worth of the business, so it is subtracted from the business. Next topic is balance sheet. The balance sheet depicts the financial position of the business on a fixed date. A balance sheet is prepared with those balances of trial balance which are left out after taking out the nominal accounts balance to prepare the trading and profit and loss account. A balance sheet has two sides, asset side and the liability side. Next topic is Tally. Tally is an application software. It is user-friendly business software which makes business account easy and faster. It is accounting software that is used to record day-to-day transactions, preparing balance sheet, etc. Managing single and multiple groups is very important feature of Tally. It does not require writing any special programs for calculating. The Tally software supports a lot of features that make a user convenient when working with accounts. Some general features present in Tally are discussed below. Costing. Profitability statement for every executable projected can be generated easily. Payroll. Using this feature, your employee record can be automated, which includes visa and employment contract management. Flexible financial periods. In Tally, all accounting functions can be performed for the time period that suit your convenience. Unlimited companies. You have the facility to create and maintain up to 99,999 companies concurrently. Data synchronization. Data can be synchronized and updated from multiple locations. This feature is helpful for fast and easy exchange of business information between offices located at far off location. Consolidated data. Companies of the same group can be consolidated in one and their single report can be registered. Advanced MIS. An advanced MIS report can help you study and understand the buying patterns of customers, and using their resources can be channeled to specific segments or customers. Next topic is component of Tally. The gateway of Tally is divided into 6 sections: horizontal button bar, the buttons, export, email, upload, language, keyboard, control center, support center, and help.